Hey guys, welcome back. Happy Monday. So last week, though we have not broken the range, right? We saw that the bears tried to sell off, but the bulls still defended it. The levels are still the same. We would need a break over 4180, right? For a move up to 4300. Or, a rejection here will take you down to 3841. We've been discussing this for weeks and we've pretty much been sideways for weeks. I'm still telling you the ball is in the court of the Bulls, right? I mean, you can see that this 4100 4880 level, right, has been getting defended till you break below that. There is no bearish move. And if you are seriously trying to short this move before it breaks 4080, I have nothing to say except the fact that good luck, right? Because you're front running a very bullish move, which could potentially send the market to 4,300. And if, let's say, you short 4150 and we don't break out, I mean, what I mean to say is you short 4150 and we don't break down and you end up breaking out, what are you going to do? Right. So, you can still try to short it with a stop at 4180 because the minute the market gets over 4180, we're heading to 4,300. And this could, some people could claim that this is a shoulder, it's forming a head, shoulder formed a head. It's going to form another shoulder before it comes down. Sure, but please break 4080 or break 4180 because as long as you're in this chop, I'm seriously not interested in anyone's opinion, right? Because your opinion doesn't matter because all you're doing is guessing and hypothesizing based on certain factors that are available to you, and no one will really know till the market breaks the range. So the ball is in the court of the bulls. I still think we're heading to 4,300. Again, that's just an opinion. We would still need to break 4180 to make it happen, right? Or you would need to break 4080 to sell off to 3850 at least. Neither of which has happened. You can sense the irritation in my voice. It's clearly because I'm tired of, I want to have something new to say, guys. All I've been saying for the past few weeks are these same levels, and all we've done is just kind of go sideways. And the fact that we've not broken down and still being managed to hold these levels despite everything, just it's just still leads me to believe we probably might hit even 4,400. But yeah, levels are there. So with that being said, right, let's just kind of look at this week's watch list. And the first thing I have to say is, if we do break over 4180 and if the bulls follow through, you can kind of see Netflix is in this downtrend, right? So again, one of two things is going to happen. You can see this. I have two boxes, right? A box at 320 and a box at 300. So if we do break out, right, you can see we're very clearly just kind of going sideways, except for this earnings, where this 4 hour kind of wicked. So it's pretty simple. If we do, I would say, though I have a box at 320, let's say 315, right? If the market breaks below 315, then it can head down to 300. But if the market is bullish and if there's demand, you can see very clearly, if I go to the daily chart, right, you can see very clearly that if this demand does hold, then if Netflix, let's take the high of this candle, right? You can see the high of this candle is about 325, and 325 would also mean a breakout of this downtrend, right? So let's say the market breaks out at 325, then I think we can head up to, 335, 340, even 350, right? A breakout of this downtrend is very bullish. So, both ways, right? If we break out at 325, we can even 375 is possible, but not this week, right? As the weeks go by, Netflix, a bullish chart of Netflix would look something like where it would do something like this before it comes down. And a bearish chart, right? You would need a break of 315 to come down to 300, and a more basic demand level would be 280. So bullish and bearish, right? Netflix has some pretty interesting levels coming up. So that's the reason I have Netflix puts on this week's watch list. And the next chart, again, I have is Amazon, and it's similar principle. Right? If I take out the log on Amazon, right, you'll be able to see that we actually broke out, right? Versus if I put back the log, you'll be able to see that we're still within the downtrend. So Amazon is interesting in the fact that we have consolidated, right? But I don't love this chart. I would still like it to get over like 108 to push up to 115, 120. Otherwise, right, this could make a nice bearish chart too. A rejection of this level and you get below 102 and we can easily come down to 90. But again, like I said, till the bulls drop the ball, I'm going to have to side with them, even though I don't care to be a bull, but that's just how the charts are leaning. So break over 108 will take you to 115 on Amazon. So let's look at the next one, right? The next one I have is UUP. And the reason for that is, again, dollar, right? I'll show you the chart of the dollar and you kind of understand, right? I've been talking about how the dollar is weak, how the dollar can't break out, try to break out, had a fake breakout, had a massive sell-off. And again, as you can see here, right, it literally has empty space down to 99, 98, even 97. So with that being said, right, let's just look at this chart. And if the dollar is bearish, again, UUP is just a play ETF on the dollar. You can see how this is kind of the downtrend, failed to break out, right? We've just kind of been getting rejected of the downtrend and we'll kind of go down to support, right? So below 27.5, 27, 26.5 seem very likely. And the next one I have is cake. It's along the similar lines. This could go both ways, right? If the market does end up being bullish, this could end up going back above the trend line, right, before going higher. Otherwise, right, we can see that this is the trend line. We broke below the trend line, we retested, we failed. So this is kind of the perfect, perfect level for this to, reject and come back down, right, down to the support at 28 before it goes higher. So yeah, I am still watching this primarily for shorts because it has broken the trend line, retested it, refailed, right? But I'm also, again, as I've mentioned, if the market is bullish, this can easily get back into the trend line. But yeah, if it does fail 32, then I think, 30 and 28 are in the cards. And yeah, we went through the dollar. We can also look at the 10-year and kind of see where we're at, right? We're kind of just sideways. So far, this is the trend line. We had a failed breakout. We retested and now it's trying to get a higher. So this could easily end up being a wave 5, right? We would have to break over like 3.6% to get higher. So that's what we have for 10-year. And the wicks, again, you can see, though we try to get back above the trend line, we had a massive failure. And what did I say? Below 18, the next level support is at 14.6. So that's almost like, how much is it? How much percentage is it of a downside, right? Below 14.6, there's almost a 20% downside on the wicks. So yeah, though I was hoping for this to break out and retest this channel, this is not very bullish. We are still holding. I mean, it could, right? It could still revive and go up to the top of this channel, but it's up to the bulls to drop the ball, right? So thank you so much. That's all I have for this week.